Hello and welcome, as it is the completion of another week, another month, and we're now entering into the month of March. We are entering into the 29th day of February. You don't get to say that too often, as this is a 366-day year, 2020, of course. My name is Derek Allbets. Trades of the like within each his own risk and their own reward. Let's take a look at gold. Let's take a look at silver and the stock market. And a lot of capitulation, a lot of downward pressure occurring within these markets. Well, for the month of February, it was down $4 for gold, or 0.25%. But the price, of course, was as high as $15.80, the high price was higher than that, $16.89. So it lost a little over $100 from that point, but 6% from the highs in which it came through above the 18 average. We resisted the 15.22, did not go down to where it came from. We've obviously resisted it a little bit here. Haven't came back down to this fib line, although closer than it was here, considering this really didn't have all that much of a correction. We finished the week down that of 3.5%. or $57 down to the 18 average of highs in this area where it consolidated in here, and relatively close to this high in here. But when I see this as I do, this to me does point out, just by looking at it as it is, most likely we're probably going to come down to the 15.22 handle rather than that of 16.69 next. So if you were to give me like even odds bet on each side, and I had to pick one side or another, I would take we would touch this number rather than the one above it. Whether we get there with any type of pop-up rallies, maybe rally to where we come from at 16.32 on the way there, that most certainly could happen. But just by looking at that area would be where I would see resistance. We could see a couple areas hit there for support, but just a very large down day, 3.59% for gold, which is just massive, of course, for that commodity. We just within the 18 average in here, when we can see before this fall took place on the gold that this is what it looked like. So you can see and I love this 18 average of highs and lows, front weighted. It's someone I had a question before what it is. It's exactly as it says, 18 average of lows and highs, the lowest and highest prices for each of the period. I use a front weighted one, which means current period it multiplies those levels by 18, previous ones by 17, 16 before that, 15 before that, so on and so forth. Then it takes the sum of those numbers divided by the sum of 1 through 18, 1 plus 2 plus 3 all the way to 18. And that's where it gets the numbers from. And these indicators, to me, there's just so many ways it just finds it helpful. And you can see how it was really struggling within the price. We had this big level of support that it established in here at 1,500 hours on February 25th. Again, 9 hours on the 26th. Come back down to this area, and now you're congesting and spending a lot of time in that area, where before you can see it spend very limited amount of time between the low of 16.25 and really around the area of like 16.35. Just a short time. This time you're resisting in it. You can see in here just these two periods in here from the 5 and the 5 and 6 o'clock stamps, how it was resisting well below the two previous highs, and there you have this red one going down, microscopically going below every single one of these lows, which already microscopically went below in the 2 o'clock one. You have this green candle rally up like that, but when you sharply see a red candle down like that, that is bad news, and that's why it's no surprise, just based on the charts alone, that you see the follow through that managed to come in. So how it's correcting it through time, a little bit of sideways action, 18 average starting to come up with it. Hasn't been any major significant price rallies after, since price action hasn't even hit any of the 18. It hasn't even come close to where it came from. So now I'd be looking at this level of 16.24 upwards to about 16.38 to be that of potential area for resistance along the way. Let's look at this even further within the Fibonacci lines that I put in a little while ago. And I guess I didn't put in the 23.6, which is pretty much where it would have went down to, even a bit below. But these are all potential levels of support. And most certainly, these two levels established exactly what the range was. So area where it congested at in here, did so supporting it. Then we can see how that fall through occurred as it was resisting from this point. But where do we see support here? It didn't. It resisted it most certainly. What we got? 50.95.85. What's the exact number on here? Just by chance. 53 cents. A differential of 32 cents. Oh, Price is right. I didn't go over. Do I get some sort of prize for that? Of course not. But let me see the 1 minute time frame. I've never even looked at this on the one yet for the first time. How did we do? None. When you don't support where you're supposed to, or resist where you're supposed to, in this case support, then expect it to continue to be pretty harsh. And well, right off the bat with this, and we resist it rather than support it. And since then, it's just played out doing nothing. We've reestablished these lows a little bit here. We supported this area here from its original bounce, so that's an area of potential resistance. No, because it got above it. Okay, that really explains a lot for the story moving into the next week. And here's why. If this was a spot where this was a bearish behavior, you had this little support in here, you have this little bit of a rally, you resist this key Fibonacci point, then you see going down. I've talked about areas of weak support. You can see where weak support would have came in here. There you go, going lower. Well, now you're expecting to lower high it. And technically it can still lower high it with this low, with this high lower than this one. But this was that general area in here. You'd expect that it would have went to like 1580. And it didn't stop going up when it had a straight up move to it. So the rally that occurred in here, there wasn't anything stopping this bear move, but for this happening, it had a lot more to do. But oh, wait a second, this happens. And yeah, just wait a second, we still don't know yet. But if this is going to be a little bit of a failed breakout, then where's the opportunities for this to break down? It goes down up here, but already making several lower lows on this time frame. And here we have this possible failed breakout, but most certainly the lower height of this, which is what a bear market setup would give us. We can see weakness on the 18 here and excitation of it down. So here is where one of the spots was. It spent more time here than it did in here at this low. So there we are resisting here. This level still not looking quite the most bullish of situations. But then this rally high, it doesn't resist this. So again, just like this came up a little bit higher than you thought, same thing with this rally as well. It gets lower high from this, then this move gets above this point, but we've had all of this retesting of this area. But because of the fact that we resisted this, if we start the week off and it does edit gaps and it starts going down here, then this thing could just continue to have big panic sell-offs. But the volatility is in play for these markets, that this could be one of those sharp, quick sell-offs that just manages to really have great moves going forward, meaning if this recovers from here, because it was supposed to sell off in here, because it was supposed to resist in here, and it's not doing those two things, that eventually when it does get above this, that there could be a at least the next move would be a sharp move to that level that I mentioned that it should go up to and around in here. Let's move on next to silver. And it lost 6% on the day, as it's now back to the previous support levels here from last December, last November, and even below the support levels from last September. It's at levels that were rallying from last July. And amongst it, just a big, wild move, as we could see in here. I guess even let's do it on this time frame. Just showing just this move in here. Not only did it reject everything, but then it did not, and it normally does here, support this spot. Because generally speaking, in the situation when you have a strong support level, which this Fibonacci line of 1740 most certainly was, we can see three different occurrences. On January the 28th, this area, February the 4th, and then again on February the 12th. How it supported it three times at or barely piercing above 17.4. Then we have a significant rally. When you have a significant move, obviously there's going to be time gap. Thus, what I like to say, the words on empty space in here that gets played. And when you come back to it, usually there's a good chance that either bullishly or bearishly you find support. And when I say either bullishly or bearishly, meaning if it's going to go down further, you're probably at least going to go to 1740, and it's going to correct either through that or price or time. But this one didn't. Just like gold, we can see that we resisted this. This high was 1739.8. I guess I was barely over on this Price is Right one. But again, just how these Fibonacci lines just continuously maintain and show themselves, present themselves the way over and over and over again. I can't explain it. I keep on getting flabbergasted by myself, but there's a reason why I always keep using the 18 average of highs and lows. There's a reason why I always use Fibonacci high divided by low to the exponent of the numbers 0.236, 0.382, 0.618, and 0.764. As well as for upside numbers and downside numbers. Upside 1.618 and downside negative 0.618 as the exponents. And then multiply that by the low. Because, well, those numbers just keep on working. And so anyway, as it goes to me, gold and silver, they're the guarantees. If I like to use that word, guarantee to hold your value, long-term time frame. And I hate to use that word guarantee, but I mean, cryptos, I can't guarantee 10 years. I can't guarantee fiat currency is going to have the value, but gold and silver, I think, will continue to do so. On the monthly term time frame, let's put across a different exchange, because those lines just make it so hard to read or to do it, which is why I make it very easy to do it this way. So on the monthly chart in here, we got it coming down on this 18 average. I mean, this is where you can see it's big in here. 18 average of lows comes in a little bit below 15. At 16, it's rising. The 18 will rise, so it'll be like barely above 16 come start of the week next week. And of course, piercing below, it's all yada yada, whatever type of stuff as it is anyway. At this little area here, we can just see 61.8. The 15.5 or so is probably to consider the must hold area, and if you don't hold that, of course, there'd be just a lot of a big decline within the market, and that would present an interesting situation. I don't think that'll happen though. I think that the chances that any of this selling will be short and sweet, but the volatility of this it's just going to be short-lived. I think any of the down pressures that come into the market, of course, the very, very long-term quarterly chart, which includes a 1971 lows in here. Just magnificent that they have that. But $1.25 up to these highs. There's $50 back then. And there's not much else to say. It's just sideways uptrend, went down. Not for that much, but a bit. But it's the down move here we can see is going consolidating. 18 average of lows on this, 15.5 before, 15.2 in here, piercing, and really previous maintained support hasn't been violated, tested 3 times, once here and before 2050, 3 times, this one, this, and then again in here. There's just going to come a time and frame when this thing is just going to break out, and this thing I think is just going to go wild, to the point where if we look at the 2 previous rates of ascents, and there's only 2 we can see on here, we got this one, and then we have these 2. That you got to think it's going to be at least in the same category. And I wouldn't be surprised if either or both of these rates of ascents actually get taken out, especially when you have a significant break above the double hit level of previous resistance.